The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And welcome, everyone, to another wonderful edition of the Power Trading Hour with me, your lovable, huggable, squeezably soft host, David White. Again, at the headquarters of Technical Trading and Investing, TFNN.com. And we've got a market out here on quad witching, and it's going to be throwing us a lot of curveballs. I bet people were singing songs. This thing looked like it was going to go back up and bust out the high again. It's back at 1585.79. We're going to talk about where this thing is most likely going to expire. I've actually put it in my newsletter. We're going to show that in a minute. Today in history, just always like to bring it back up. In 1787 on this day, June 21st, New Hampshire became the ninth and last necessary state to ratify the Constitution, and it was we the people from now on. We have our own little arguments and disagreements about how the country should be run, but the idea was if we put everything into words, the core principles of the way the country should be run should be pretty decent. They were well thought out, and a lot of effort was put into thinking about how the government screwed over the people, and that the government should get the power from the people. People should not get the power from the government. Unfortunately, most people continue to forget this, and why we almost always run into trouble is when we wander away from core principles that have lasted the test of time on this day. As always, if you want a copy of the Constitution, you can email Leanna at TFNN.com or call us, and we'll be glad to go ahead and send you a pocket Constitution. Tom still has about 5,000 of those back in the storage room, and I think he'd be loving that everybody had a copy of it and at least read it 10 times so that they would know why we're screwed up. Now, anyway, back to the market, which is already in progress. 1585.59 right now on the S&P cash. Yes, we went to a lower low. We're going to have a higher volume. We're starting the show off today with 3.4 billion shares. That means that this is going to be a fairly decent day. I would watch the close. Of course, with quad witching, we have the futures expiring in the first 5 minutes of the trading day. Then we have the options expiring in the last close of the day print. So it is always one of those things that is incredibly interesting. And with quad expiration, there's always a lot of people wanting to push this market around to try to get out. That we popped up this morning was a issue, several issues out here, but while a lot of people think it was Bernanke's testimony out there that started the sell-off a week ago last Wednesday, I suspect that it has a lot more to do with China. I think it was probably around 6 o'clock, 5 o'clock, 6 o'clock last night that China's interbank lending rate was looking to open at 20%. Of course, they are 12 hours away from us, and I think it didn't open till actually their first print doesn't come in till 9:30 or 10 o'clock at night. But what we know about that, 20% from, whatever it was, 8 or 12 or 13%, it was very clear that last night the banking system in China could have easily frozen up. The bounce we had out of here was China coming in and intervening into the marketplace, and will be interesting. Anyway, you can always give me a call at 877-927-6648. If you want to check out the interbank lending rate. China does have a website. It is called Shibor, SHIBOR.org, and you can always check that. We've got a call from Max in Houston, so we'll go ahead and go directly to him. How you doing today, Max?
I'm doing just fine. David, I got a question.
Okay.
I was just looking at it's kind of like a compound question. I was looking at the charts, and what I did notice is that there was a gap in all the equities in around January, and now there's a gap down.
Hold on a second. A gap in what? The S&Ps, the NASDAQ,
well,
what?
It's just about all the equities. You can look at like the home builders, KBH and DHI.
Okay, so is it on the individual stocks, or is it on the...
Yeah.
Okay, so if I pull up the S&P, you're talking about... let's come back and take a look at this.
Well, in general, a lot of them just, when we had that talk of the sequester and whatever that got, solved, all the stocks rallied and there was a gap.
Oh, right,
like,
the gap from the beginning of the year where this thing jumped up.
Correct.
Okay.
Now, 2 days ago, we have a gap on just about everything, on a gap down on all the stocks. So my first question, is that a huge island reversal?
I would not, well, it depends on what you're talking about. On the S&P cash, I'm not going to call it an island reversal. I'm going to call this more of a, if you've heard what I've been talking about, Joe DiNapoli's pattern. Have you been listening to the show?
Not in the last month or so.
Okay. Island reversals normally have one big, like, shooting star way above the trading range, right? So if we had, like, one day that was at, like, 1,700 up here, we'll say at the May 22nd high on the S&P. You had that day. The next day, we'll say it opens and closes at 1,700. The next day, it's back down into the 1680s. And you have that one day. It's really sitting out there as an island. That's an island. This is, there's nothing out here that stands as an island reversal. What you have, I think, is a pretty classic topping pattern. And what I'll do here is put my overlay on it. Now, this is the pattern that I've been talking about for the last 2 weeks. It is called, Joe DiNapoli had it. It's a book that's about $180, but I'll give you the Reader's Digest version of it. Okay?
Okay.
It is 10 to 15 days above the 3x3 displaced moving average. If you don't have that in your charts, you can use a 9-day moving average.
Yep.
Okay. So you get 10 to 15 days. So let's go back here and look at this chart. The first day that it really broke above it was on 4/23 of, so what is that, April 23rd. You get 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 days above it. You get, what you want is something like that. You want 10, normally it's 10 to 15 days. This is super extended, 20 days above the 9-day moving average. You want normally something like 4 or 5 days underneath that. You want to close back above it for a day or so, and then the next huge close below it, which we had yesterday, is the signal to go short. So if there was any signal on a longer term basis to go short, it is that Joe DiNapoli, it's called the double repo pattern. I think you can find copies of it on the internet. If you just Google Joe DiNapoli, it's D-I, what's it? DiNapoli. D-I, I forget.
N-A-P-O-L-I.
Yeah. And he used to be a guest on this TFNN around 2000s. He ended up moving to Asia, and I think Singapore, if I'm not mistaken. But this is his pattern, and it's really a long-term pattern. And what we have today out here is the confirmation of this. But if there was any pattern out here that I would say is a clean pattern that has worked in the past over long periods of time, it is this, parabolic move higher, a close below it, a close back above it, and then the close once again back below it. So either the 9-day moving average or he did all his work with something that's called the displaced moving average. I don't know if you know about that. But
it's a 3x3.
Yeah, it's
right.
just the last 3 days. It's pretty much very close to the 9-day moving average. The one nice thing about it is it projects the next 3 days into the future. So you've got a clear Joe DiNapoli sell pattern, and this one's even a little bit bigger because you got 20 days on the way up, which is a pretty good indication that you're going to have a huge move down. Now, what does the double repo pattern say? It says that you normally go almost instantly back to where at least where the market took off, and that is on 423, the first day it really, you could even call it 422. Either one of those days is the day that it closed above that moving average, and so it would say that the low of that day right there, what is that? 1562.50 is where that thing is going to run to quickly, and that's almost, you almost get that instantly, but not a pretty good topping pattern out here. But I would say that it's much closer to that than anything else that we're looking for in like a repo or a reversal pattern. You do have what would be called dark cloud cover from yesterday. That you got everything eaten in the candle in the 2-3 days before it in yesterday's candle, and today you go back and you blow away all that trading. What is it? Back to what? The 1st of May. Yeah. So a lot of people already in fairly deep doo-doo back here. That's not uncommon to see these things pretty much wipe up out and everything out of these patterns. So no reversal pattern, but it is a topping pattern that I like. And these double repo patterns will happen maybe once, twice a year, both on going up and going down. So they're not, it's not like the island reversals that you see a lot more of. This seems to be a very good pattern, even absent of volume. But we've got the last 2 days of volume are huge indications that we're headed lower. So you have any other questions on that?
Yeah, well, if we could switch to either DHI or KBH, the builders, either one is fine. I'm short on I have puts on those two. They're barely in the money now. They're in the money by $1 or so. But like every time I just, I do the ABCs, maybe I'm not doing them quite right. I think they have more room to run to the downside.
Yeah, but you really want to short the weakest stocks, or do you want to short the strongest stocks?
Yeah, but probably the weakest stock.
And so I think you already. When did you short this? Can you hang on through the break?
Sure, no problem.
We'll get back to KBH in just a minute. This is the Power Trading Hour with David White, your humble, lovable, squeezably soft host. We'll be back in just a minute talking about KBH as we return.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, I had somebody ask in the den, and we'll get back to Max in just 1 second. Wanted to know about displaced moving averages in Art of the Timing Trade Charts. The overlays, which are the symbols, which are the indicators in the price area. You go to the Overlays tab. You can select like Bollinger Bands, Displaced Moving Average, Traditional Moving Averages, Displaced Moving averages from Joe DiNapoli came in 3 ones, which is the 3x3, 3 days, average 3 days into the future, 7 days, average 5 days in the future, and 25 days added 5 days into the future, and multiple combinations of each of those. So if you just turn those on, there's also a little button that says Overlays on the main chart controls panel. If you click that, you'll see that it turns on and off. Anyway, we're back to Max in Houston. And what was your question on KBH?
Well, when I was on KBH or DHI, either one, I was just doing the ABC down because it seems to be that they broke the B point with volume. So, but I see them going down, substantially more. Now, every time that I seem to find myself in this situation, I wait a few more days, and then the thing turns around and goes back up.
Yeah,
and I understand.
Yeah, here's the first part of it. Any model of the stock market that any academics have ever tested pretty much comes down to this, that 50% of a stock's movement comes to the direction of the market. Okay, 25% is the sector, and 25% is the stock itself. So if you have the market wrong, you're normally going to be wrong. If you have the sector wrong, you're only going to be about 25% wrong. If you have the stock wrong, you're going to be wrong by about 25%. But if you have both the sector and the stock wrong, you're going to be about as bad off as if you were trading against the broad direction of the market to begin with. So I would say that the problem here is that you have a stock that everybody wants to buy as soon as it pulls back. And you've got about 50% that you're going to be wrong on this by being short the housing market. Do you follow my thinking there?
Yep.
Okay.
Yeah, I understand.
There's just better places to go. Stocks that were very, how can I say, that were just hugely overpriced with no volumes at the top, and we've been discussing those on the show over a few days, over the last probably 10 days out here. There are just a lot of them with very high prices, testing previous highs on lower volume. And the same thing, there's some stocks that were ready to move up as interest rates go higher, and some of those have been testing the lows on lighter volume. But this, you never really got a clear signal. Everybody wants to buy housing. I just can think of a lot better stocks out here that I would rather be short. That's probably why you're seeing the premiums in these things evaporate as quickly as ice cream melts on Georgia asphalt in July. The premium is just going to go away because no one's thinking that there's going to be that much more risk in these stocks to the downside right now.
Yeah, that's the problem.
Yeah, and you want stocks where everybody is fearful and willing to continue to pay for that premium to the downside. Part of the problem also is that we are on quad witching today, and you're going to see a lot of people. Probably by 1 o'clock, they just started to try to suck out as much of the premiums as they can going into the weekend. And, of course, the ones that are actually expiring today, that's it too. But I think you're probably going to get what you want out of this. You would probably have done better with another stock. If you set up the ABC Downs, you got basically a 50% retrace in it. So not so bad, right? I see what you're looking at. It broke it. Now, the question would be, did you break in the last 2 days the previous low with higher volume? And the answer is a resounding yes. You had 7 million shares at the $20.01 low out here with 7 million shares, with 8 million shares yesterday, and you're going to have a little lighter today. But this thing's probably going to come up. What month do you have on these KB puts?
They're October.
Okay. I just would have probably shorted something else. Could you get $17.36 out of this thing? I think you could. We're going to probably need some more destruction over the next week, but I don't think that that's a big problem. I think we could easily see 1550, 1525, even 1475 before this market stops to the downside. So I'd probably, if you got Octobers, I'd sit on my hands.
Okay. Well, thank you very much, David.
You bet.
Appreciate your time. Thank you. Bye-bye.
Bye. Yeah, ABC down 1-1 is probably 1736, but I'd probably be looking and thinking about buying it there.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, we're going to have certainly higher volume or significant volume. We did make a lower low, went to 1577 on the S&P cash. 3.6 billion shares already. Suggests that we're at least going to get a test of 1577 again here before any possible or long time or even medium time move in this market. But I think a fairly decent opportunity to close below 1600, which will get everybody freaking out in the market a little bit, and the kind of the necessary how can I say fear that should be in the market always. I've never felt when being long or short 100% safe. That's, I think, part of a good trade. Anyway, we're talking about China and their Shibor. Anyway, if you want to check it out, but pretty reason we didn't probably pop down another 50 or 60 points on the S&P cash today was China coming in and stepping in from what looked like their banks could be seizing up. They were down, 0.5% today, but continue looking for that, and it's shibor.org if you want to check it out. I'm showing in the den and on Tiger TV the Wednesday, June 12th edition of my daily newsletter. And in here I talked about it getting to 1575 a week ago Wednesday based on what the options were printing. I'm going to call it 1577, not too bad. Thought we could get as low as 1550 with a bounce. This market really looked like, even a week ago on Wednesday, that we had a good opportunity to close at that 1575. Options, I've talked about this many times. Options have a good indications of where the pros think that the market's going to close a week from Wednesday, and we had a part of that. But and just a reading from my newsletter, the Asian market looks like they would fold faster than a $5 suitcase, and every time they get weak, we see intervention by the world banks. I suspect that that will cease to work. The idea is always to slow the moves down and have an orderly market. I still think that that's exactly what everybody is looking for, and that is trying to keep an orderly market and not let this thing get away from them and let it pull back. This thing could get out of control and in a hurry if we have problems. Anyway, that's pretty much it. We want to get back to some charts, and I want to thank somebody in the den for bringing up the TLT the other day. Of course, I never can remember anything more than a day away. What I did want to show is that we have finally closed at least a couple of gaps that have been out here for a while. We've been talking in the den about these. The longest gap occurred back on the 2nd of September in 2011. And actually a very nice sized gap, which we're filling out here. The high of that day was 108.98, and I believe we have gotten lower than that today. Let me turn off those. 108, yeah, 108.80. So, you know, we have closed that gap. I still think we have a lot of volume here, which means that we could, one, either go lower, or two, go sideways for a while before this thing gets ready to bounce. Or if you get a bounce, probably a retest of this before you would be wanting to go long TLT. So it is what it is, but just keep an eye on this. We at least have gotten to one level. I don't like, I mean, we had monster volume yesterday at almost 28 million shares. So if we go back and look in the past, what have we had at this level? We've had 14 million shares on March 19th, 2012. Got into this with about 2 cents, actually a buck higher. On October 27th of 2011, we had 19 million shares, and that gap up happened on 16 million shares. So everything says that we have more energy right now, at least at this point in trading. Does not look good for the bond out here, and maybe we'll go through with this with Tom tonight during the Tech Insider Hour, because I think it's fairly interesting to see that we had significant energy on the downside of this market, and it continues to show that we have a good possible weakness. And of course, anything can happen on quad witching, and usually does. If you are watching on the show, did want to bring up a few things that are looking fairly good. We talk a lot about the art of timing the trade charts, getting fairly close to finishing the introductory price out here. One of the things I did want to talk about was Gartley patterns. We've talked about a few of them, so I want to show them. Probably go through them again tonight with Tom. But Gartley patterns, if you're not familiar with them, basically a five-leg pattern and based on Fibonacci ratios. If you go to the front page of TFNN, I've got videos that basically explain them and the ratios between the price moves. Every night we go through 5,000 or more stocks and look for Gartley patterns in the marketplace. Normally you like to see nice reversals that come back about 78% of the original leg that starts the pattern, the X to A pattern. And what I'm showing, if you're not watching, is the EUO. It's the ProShares Ultra Short Euro, and so we are short the Euro if you are going long this stock. The X point started out here on February 1st at $17.56, 3.5 million shares. You get up to the top, and volume's fairly light on March 27th. That sets up your A point for a Gartley at $20.22 with 930,000 shares. You come back and you get your B point on May 1st at $18.77, 1.3 million shares. Go back up higher. Volume's pretty good up here at the C point on May 17th, $20. 1 cent, 990,000 shares. We come down, and of course, what you really want to be watching is how the volume reacts as you get below that B point that we had, and that was 1.3 million shares. So the last few days, they were all fairly low volume moves, but actually came in and the volume was very light. I did take this trade in the daily newsletter at $18.22, so about a nickel better, higher than the best price we can get on it. But this is one of the patterns, if you really want to start reading Tom O'Brien's book, The Art of Timing the Trade, and looking at his Gartley sections, this is exactly the kind of stuff that you want to be looking back out of, because this is one of the better patterns out here in the marketplace for understanding these Gartley patterns. But this is pretty much what you're looking for. I might have liked to see just a little less of a retrace from the A to B to C point. This actually did retrace 86% of that A to B leg. So if you figured out 86% of $20.22 to the $18.77, that would be $20.01. Normally maybe 75%, but this looked fairly decent, and just the underlying movement in the dollar itself had me take this trade, but almost the perfect pattern. But if you look, what really had tipped me over was just 3 or 4 days going sideways. In fact, I was looking at this thing since the 11th of June out here, and this thing was just going sideways. The volume was very light. There was just not a lot of pushing. When I looked in the contracts themselves, it looked to me like there was every indication this thing had pretty much gotten down to the lows. I wanted, actually, the target was $18.13 for your buy point, but it was, when you looked at this thing during the day, you could just see there was almost no volume and when it went down there, and I went ahead and took the trade. Almost a perfect entry, and not that I do that every day, but this is one of the better looking ones out here, and probably a good one to study when you look at it. Another one that I want to go through today is CLMT. This is one of the ones we had in our scans, and again, you don't want to go against the market if you can if you can avoid it. But this is another decent one if you're going through and trying to learn Gartley patterns at the beginning. This one actually only got back to a point or 68% of the original X to A leg. And of course, like I said earlier in the show, you don't want to be normally long in a market that's headed down. But a fairly decent break of the low. So if you look at this one on the B point, it had 1.9 million shares. As we went through that B point, you had consistently at least half that volume all the way down, and even at just 750,000 shares on that June 5th low out here. So volume is very low as it broke through that B point. Pretty good indication that we were going to get very close to that thing. I thought I may even have taken this trade if it would have hit this gap that was down here at the $31 level. So I did not take this for 2 reasons. One, never got to $31 level. 2, it didn't. It was basically, I thought the market was going to fall over. But another good one, if you want to, if you've got the program or if you're just doing it at home, take a look at CLMT. Now, probably one of the most perfect ones out here currently is the one that Oracle had. And we've seen this thing actually blow apart overnight. This actually went into, you could almost say, multiple let me do here a 1-year chart. You can almost say multiple Gartley patterns here. And let me zoom back up in here. This actually had kind of a little smaller Gartley pattern, and you were getting a counter move out of this. But I was looking at the bigger Gartley pattern out here. We've been talking about this thing for at least a few weeks on the Tom O'Brien show. This is another one where you want to see how everything works up perfectly. I really like this one because it actually did touch the gap like we didn't see in CMLT. This one came back up into this gap, it filled the gap. That gap came down on 132 million shares. You already knew that this thing was in trouble. As it came back up into that D point and filled the gap, just a whole lot less volume. 260? Yeah, 260 compared to 40. What was that? 41? Yeah. So a whole lot less volume. This thing, of course, almost perfectly to the 782 retracement, and it is highly annoying that we're listening to some chanting or something next door. It's really starting to disturb me here. I'm not kidding you. I think there's some Hare Krishnas that have invaded the building. Anyway, what else do we have going on in here? That is, this thing actually has popped down fairly hard, and that is, you've got some news on Oracle. I'll probably bring that up at the same time, and that is that they will be rolling out a partnership between them, Microsoft, I think Amazon, and a few others in the tech community. Probably the biggest thing is Oracle and Microsoft have been kind of frenemies for a while, and this is probably one of the first times that we've seen Oracle put together some kind of deal with Microsoft in a while. That is just interesting. So, but a good example of what you're looking for. One of the other things I did want to show back here is what I look for in these trades, and that is this nice indication of no energy on the way back down. When we look at my power law vector indicator number here, which is a combination of price, volume, and time, we have a number that ends up being 19 relative to about 7.9 on the way back up on the C to D leg. A very good indication that you were coming back up here, and this thing had no energy on the backside leg. But I really don't short Oracle that much, just not a lot in, highly owned institutionally, but a pretty good indication that this thing is having some issues out here. And I think a Z in the den, but yeah, the EUO, there were some very good setups in the Gartleys. We'll be talking about them with Tom tonight, I think in the first outer. Do we have a phone call here? Is this Alex from Denham, Massachusetts?
Yes, it is. Hi. And
you're a Goldfinger or a Gold member, or what are we doing with gold here?
Well, I was looking at the, I have the IAU, but I own a small position, and I was wondering if you're thinking about this little bounce here we're having. Is it short covering, or how much of a bounce do you think we'll have here?
It's slim to none. You want to hang on through the break, and I'll be back and talk about this?
Okay, thanks, Dave.
Okay. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Do we still have Alex on the line?
Yeah, I'm here.
Certainly do. Okay. Anyway, Alex, you're thinking about gold. And
Yeah, I have a small position in the gold trust, and it's up about a little over 1% today. And I don't know. I just was curious what your thoughts on this was.
Well, I'll tell you this: there are no circuit breakers. There are no stops in gold futures, and to me right now, I don't want to have anything that could. I don't know when these sales are going to go through the blowout we had yesterday, but these physical gold sales are going to be going through. And I at least agree with Tom a little bit in that I don't think we've seen the end of this yet. I would wait until we at least test yesterday's low one more time before I want to be long this. Just the risk, to me, the risk would be too high out here. You came down in huge volume, you gapped down. I suspect we could get 2 or 3 more gaps down just like this. Because when gold really starts moving, You have all these people start unwinding their positions. They normally, on the first huge move down, will sell the stuff that they already have profits on, and they'll be stuck with the dog that they have, which is probably gold. And then eventually they get to the point where they actually have to sell gold. So I have a feeling that the first move yesterday didn't see a lot of people sell gold. They probably sold stuff that they already had profits on, maybe the housing market, that kind of stuff. The next gaps down on gold, we're going to start seeing them actually sell a lot more gold, because they're probably out of their long positions, or a lot of people are out of their long positions over the last few days. And these guys are now looking at the ones that are losers, and that loser is going to be gold. And
so you think we have a ways to go before bottoming on this?
I certainly would want yesterday's low to be tested before I would even consider a long position, because I think we've got an easy chance. And I am not betting. I want to buy the low out here. But every time I've ever wanted to buy gold, it's when no one wanted to buy it. I mean, I've had people in the den in 2004 just tell me that the gold was over. I couldn't find a soul that wanted to talk about gold, and when I said I bought it, they all threw old rocks and sticks at me in the den, and that's when I knew that I bought gold at the right level. That was after it took off and then pulled back, and no one wanted to have anything to do. I have a thing, if you don't hear anybody call about gold for Tom O'Brien on a show at night, everybody's so sick of it they can't stand it. That's when I think you might want to look at gold a little closer. But I think it's going to get like that. I think we're going to have certainly, I think we could easily have $1,100 or even $1,000 overnight, and then the thing be back $1,200 the next day. And I think you're going to see some kind of massive reversal, but it's going to take everybody puking up everything that they have in gold and washing everyone out, and then it'll be the time to buy. I don't think it's, everybody thinks this is a big move in gold. I don't think so. I think we need gnashing and wailing of teeth. We need people out there and with cups and nickels and pencils in the street. We need real signs of stress, and I haven't seen that quite yet. I haven't seen the kind of maddening people saying, "I just got to get me out of gold at any price" yet. I think everybody still believes just a little bit more, and I think there's going to be a move, and it's going to make people so sick of gold they don't want to stand it. And when you can't stand it, it's probably the time to buy it. So,
what do you think of the, can I ask you one more quick question? What do you think of the general market? Do you think we have a little bit bounce here before going back down? Like, what's your take on Monday?
Probably 10 points higher.
Oh, really?
Yeah, and then that's it. And then I think we're quickly going to be headed down to probably 15.25 next week, 14.75 the week after that.
Okay.
I think that could be a good chance. Anyway, thanks for the call. We'll see you in about an hour on the Tom O'Brien Show.
Have a great weekend.
You bet.
Bye-bye.